Hey everyone, Tommy Derfler, Sam Rice back to you. Lighthouse Wealth Group. We are on the Spotlight podcast and hope everybody's enjoying our podcast. Please do like and subscribe. Check us out on YouTube and of course our website, www.lighthousewealthgroup.com. So what we're going to do today to kick us off is one thing Sam and I were talking about is really talking about what we do and when and how to choose a financial advisor. So we were actually just talking about this before we hit record, and I stopped Sam and I said, man, we gotta hit record on this because this is good, because what we felt like people need to know is when to use an advisor. There are times when to use an advisor or wealth manager, and there's times that, hey, we actually say no, don't worry about using someone. And I think it's important to kind of get it out there, because when you're in the meeting with a financial advisor, every advisor's going to say, oh yeah, you need me for sure. And you can almost tell a little bit of a reluctance with folks of like, hey, do I really need this? Or, are they just looking for their next client? And so we want to be able to talk about that to give listeners a good idea of, when they should and when they shouldn't be looking for an advisor. So,
well, and I think one of the other things too is some people position themselves as a financial planner or wealth advisor, and that may not actually be the case in some cases, but they position themselves as such.
So expand on that. What do you mean by that?
Well, there's companies out there that, one of the things that we're going to talk about are credentials, looking up, doing, people are going to be handling your money potentially. You want to do as much of a background check potentially on there, and there's sources for that. And some people using, say, insurance products or other things of that nature as a retirement planning solution, or a one-size-fits-all, when they're just necessarily just trying to sell something, when they don't potentially have a fiduciary background or an obligation to their clients, which is something that we'll bring up in the future, but something that you definitely want to ask the person that's going to be working with your money.
Yeah. So let's talk about, when not to use an advisor. Let's start with that first. And I've been, my 16 years of practicing here, I have been in meetings where it didn't make sense, where I actually told people, hey, this doesn't make sense, And I think there's three things I personally look for as an advisor that says, okay, if you like these three things, you don't need me. You don't need an advisor. One is if you have some level of experience dealing with investments. Okay. You got to have some level of experience where you said, hey, I know how this works. I've done it and I get it.
A lot of self-confidence.
Yeah. The second thing would be a passion. If you enjoy it, if you, I've met with a lot of people, I really like the investments. Yeah. And so if you have the passion for it, you handing something over to somebody else is not going to help. It's like taking something away from you that you enjoy, and that's not going to work.
Yeah.
And then I think the third thing would be the time. If you have time. So that is where, because these things do take time to look into, to research, especially with the investment side of things, it can be complicated. There's so much information out there. So I would say the three areas, if you have the experience, the time, and the passion, you don't need to pay an advisor. Because I think what I've seen is people that try to do that and use an advisor, both sides just get frustrated. The advisor's getting frustrated because they need to be able to have the autonomy to say, hey, listen, this is what I'm recommending. This is why you hired me. And if a client isn't on board with that, or they're kind of battling that a little bit to some degree,
constant pushback, receptiveness, in a healthy way.
Yeah. Then neither side is going to want that relationship.
Yeah. Well, you're trying to have two quarterbacks on the same team.
That's exactly it. Yeah. So I think a lot of times, if you have those three things, now what happens and what I've found out is that a person might start with those three things and then they might have a life event, or
Mm-hmm.
their enthusiasm for any one of those three starts to decrease. And all of a sudden they say, hey, maybe I have the passion and I have experience, but I don't have the time. I've heard that.
Yeah. It's probably the most common one. Yeah.
Mm-hmm.
Especially for people that need some advice. They're usually in that very time constrained work environment.
Same thing for passion. Hey, I really enjoyed this when I was younger. I just don't enjoy doing it anymore. And therefore, I'm going to start handing this off to somebody.
Mm-hmm.
And then if you don't have the experience, I would certainly caution you to go into something if that's just something you don't have experience in, because a lot of times you can do more damage, by not having some of that experience. You might have the passion, you might have the time, but if you don't have the experience with some of these things, then it could be kind of detrimental to your financial situation.
It's real money.
Yeah, it's real money. Exactly. um, so hopefully that helps listeners understand some of those situations where, and I would argue too that if you're just starting out, if you're let's say you just started out, you're graduated college, you're getting your first job, I think listening and incorporating Dave Ramsey's baby steps, I mean, those are all great things to say, hey, you don't need to pay somebody to be able to help you with those things.
And I would also venture to say that, I mean, there are a lot of people in our position that if there's a young, professional or something like that, really trying to get their foot off on the right, their life on the right foot
Mm-hmm.
after college or something like that, would be more than happy to having a quick meeting with that person to help kind of at least double check that they're doing the right stuff. So don't be afraid to reach out to people and ask for some advice.
Of course. And that's where with us too, I've said, hey, here's a couple things. I just point you in the right direction. You don't need
Yep.
to pay an advisor. Just here, you need to get out of debt, or here's some good advice, wisdom for you. Hey, get out of debt first. Or, hey, if you have extra discretionary spending, make sure to try to see if you can max out your 401k plan at work or a retirement plan.
Exactly. Great initial steps.
And those are easy. And even in retirement plans, they're getting easier for a lot of investors and employees of the plan to invest, because now they have target date funds where they say, hey, you don't need to know how to do this and pick and choose these different things. Just tell us what retirement date, generally speaking, you're looking at. And then we can put you in a fund of funds and reduce the risk over time on your behalf. And so I think in those very simple situations, maybe even having advisors say, hey, yeah, you're heading in the right direction for peace of mind's sake. But, I think those are situations where if you have a very, very simple situation, you really can get started off the right foot, going in the right direction.
Yeah, definitely. And I would just add to, as we were talking about three things that may put you in the category for needing an advisor if you lose some of those. Also, just big life changes.
Yeah.
Maybe there was a job transition and you're like, man, I'm trying to juggle a lot of this stuff, but I'm trying to keep the finances correct. That's a big thing. Selling a business. Maybe there was a passing in the family and you don't really know how to navigate the waters in that realm. There's estate planning attorneys that you can talk to, but then there's also probably the financial piece of it that's going to be very important to navigate. That can be really overwhelming for a lot of people.
Yeah, I think of it as almost like a change in your financial status. So one way or the other. So one could be that, hey, you have a windfall, you have an inheritance. It could be an unfortunate situation where passing of a loved one, where you received insurance proceeds, not knowing what to do with that and how to handle that. Those are pretty touchy life situations where you certainly need somebody, especially in that high emotional state, to be able to be a sounding board and to really help you and be there for you as far as how to handle those situations. I mean, we've all heard of the lottery winners or even in sports and entertainment, people that come into a large amount of money very quickly and without the right guidance or somebody would walk with you to handle that, a lot of these people go bankrupt quickly. And so that's really a really important part to say, hey, this is the time if I have a change in financial status, or if you've lost money, if you've lost a job and you're not finding the next one very quickly and you're running out of money, and it's like, hey, I've got to really get this. What are my options here? And so I think you're right. A lot of those life transitions play a big part of having somebody there to walk alongside with you to be able to help you navigate through those transitions.
Mm-hmm. Oh yeah. And so transitioning from that, when does maybe doing it yourself doesn't really cut it anymore? What do you think?
I think as you get older,
Mm-hmm.
I think that I think as you get older and looking at retirement, that's a big one. That is certainly when you're 5 to 7 years away from thinking about when you want to call it off. I think as you grow money and your wealth, things naturally just become a little bit more complicated. Your planning might change. How you handle taxes might change.
Taxes will definitely change. Yep.
And so not knowing what you don't know is a big part of that, to say, hey, great. Maybe you've gotten to the point where you started off, like we talked about earlier, somebody just out of college just starting, and you did all these right things for 20 plus years. And then you get to a point and then it's like, now we're talking about a whole new ball game and I really can't mess this up. That's where, looking and going from do it yourself to saying, hey, I'm going to need more help. And that entails somebody who can help look at your blind spots for you and say, hey, let me look at the entire financial picture and what are we trying to accomplish? And then we've got to start putting these pieces into place to make sure that your insurances are in good order. Your retirement planning is in good order. The investments are in good order. And that's where I think things become a little bit more complicated. And saying, hey, it's worth now starting to look and say, hey, who can help me with this?
We build a moat around the castle we built.
Exactly.
Yeah. When I was just thinking about this too, if you're trying to manage the investments yourself, and a lot of people think that, most of what we do is like stock picking. Maybe that was the case back in the 80s, but not so much anymore. It's really on the latter side of how do we plan this the most strategic way so that we can pull it out and use it the most strategic way, whether that's ease of use or ease of the most tax efficient way, but rarely is it just picking the right investments.
Yeah,
the investments will fall into place as we build what we're doing this for, the purpose. And then the other thing that just came to mind too, is you're starting your investment accounts and maybe you've read some stuff online and talk about a diversified portfolio and stuff like that. And so you're picking some companies here and there and you're like, okay, Microsoft, sure, 5% of my portfolio, maybe that's $1,000. Maybe it's $5,000. But once you get to the point where maybe that 5% allocation or 10 is 50, $100,000, and you're trying to make a little click on the computer right there and make that decision for yourself and your wife and your family, or vice versa, and being able to take that weight off people's shoulders, I think is one of the kind of unspoken happinesses that a lot of people and relief that people see in handing this off to professionals.
Yeah, because I think as your wealth grows, it magnifies any concerns you have. It really magnifies
any errors.
That's right.
As
and
well.
So to your point, you're absolutely right. And so to your point, the market naturally changes your investments over time. And so what you started with is not, if you just leave it alone completely, might not be what you initially intended on based on market changes. You can ended up taking more or less risk than you initially thought if you're not careful with it. And so I think that brings up a good point too, that you had mentioned of like, hey, it magnifies an error, and you go hit that sell button, and you're kind of shaking your hand a little bit more just because you're thinking, oh boy, is this the right thing? I think I'm doing it, or what kind of taxes is this going to trigger that I'm not sure, I don't know about.
That was just what I thought about too. Maybe a small position turned into a very large position, and man, it's just worth every penny to get some second advice on
Hmm.
any decisions like that you're trying to make.
Yeah. And it's funny because, I'm a CPA, and I did my own taxes for years. And it wasn't until a couple of years ago that I said, man, I'm done. I don't even want to do
Yeah,
my own
that's
taxes
right.
anymore.
Yeah.
And it came down to time. I didn't want to spend the
Hmm.
time to do it on the weekends when I wanted to do, many other things. And I didn't want to keep up with tax law. There had been several,
Yep.
there've been a lot of changes in tax laws the
Changes.
last 3 to 5
That's right.
years. And I didn't want to keep up with
You got
that.
to
And
keep up with
so,
that. And you got to be, if you're making whatever, if you're in a more complex tax situation or investment situation, you if you're going to do that yourself, you need to be pro in that yourself.
exactly. And that's where I said, okay, I'm done doing that. And so I handed that off, and I couldn't be happier.
Yeah.
I
Worth
could
every
not be
penny.
happier. Yeah, and I'd be glad to write that check. Here you go. I don't want to, I'm just trusting that you're doing it, and um, to me, that's just what mattered the most. And so that kind of hit home to me, and that's why I decided to, do that, because I lost the passion and the time. I had the
That's right.
education, but I lost
Yeah.
the passion, and I was tired of losing the time that I wanted to do more meaningful things.
Hmm. Yeah. Or spend time on your actual job. Yeah.
Yeah.
Most people are professionals at their actual job, and then you're trying to do this on the side, and it's asks a lot of people to be professionals in all those different areas.
Yeah. And I like what you said earlier too, is there is a long time ago, it used to be that you paid, used to call them brokers. We were
Yeah.
brokers, in the 70s to 80s, we weren't advisors. We were just brokers,
Yep.
and you would pay a broker a commission to say, hey, go find me a really good investment. They would do that. And then they decided to sell or something like
Yeah.
that. They'd give you a call, and that was it. And I think that's
Hmm.
really changed because, it's, you can't, everybody's on equal footing when it comes to investment selection to some degree. Right.
Yeah,
And
it is
so,
now. Yeah, it probably wasn't before.
no. And so we get paid, not to be able to pick the right investments, but we get paid because we want to manage your entire situation to make sure all pieces are working together. And a lot of that entails just looking at your blind spots.
Hmm. Yep.
Um, and so, and I think that it's up to us to really help educate the public too, because we still every once in a while get in front of people and they'll say, okay, well, hey, what about these investments? Haven't they done well? And why haven't they done well? And hey, I thought this was why I'm paying you. And it's like, well, yeah, that's part of it. But one, nobody can predict the future. So,
Hmm.
and then two, it's like, hey, we're here to clean up a lot of these other areas as well, and making sure, like I mentioned, the insurance planning is in good order, the retirement planning, kids' college, accounts, making sure that cash flow is good, and that all those things are working together. And so, but transitioning, so if a person says, okay, great, okay, guys, I got a better idea of when I need to go see an advisor. Now the question is how to choose an advisor.
There you go.
You have any thoughts on that?
Yeah, I mean, I think we briefly talked about this, but doing your research, and there's websites out there like BrokerCheck or something like that where you can look at the background of the person that is is soliciting business to you or trying to be your advisor or something like that. And then also looking for different designations, some additional education that those people have gone through, whether they might be a specialist in some niche area or just a general specialist in financial planning, like a CFP, um, and somebody that is going to have a fiduciary standard, I would
Mm-hmm.
say, to your well-being. And going back to kind of what I was saying before, getting sold stuff that may or may not be in your best interest as a client, whether somebody is a fiduciary that's actually going to be building a plan and a strategy for you, and then talking about investments after we've built that, after we've found the purpose,
Mm-hmm.
um, is key,
Yeah.
I think.
Yeah, I like what you said. I think there are some things in broker check, where you can look at the background to say, hey, did the advisor I'm interviewing have any issues that I need to be aware of in the financial
Mm-hmm.
services industry? That's a great place. I think, the credentials are great. Certified financial planning is gold standard in our business. Being a CPA, there's a lot of other designations out there, but I think for financial planning, the CFP is kind of the gold standard. And then, of course, if you see other designations, those are always great, but they kind of support, the CF. To me, they're there. The CFP is the number one thing you got to look for, if you're looking for that. I would say years of education, or I'm sorry, years of experience is another thing to look for. Um, and I think, when you go and you sit down, I think you have a good list of questions, things we just talked about. Hey, how many years have you been doing this for? What are your credentials? Um, what's your philosophy? What's your approach? Understanding, hey, where are you coming from? Because even though we all kind of do the same thing, we all have different styles, different approaches. Um,
Mm-hmm.
some people work well and advisors want all the control. Hey, I'm going to do all this for you. Don't worry about it. Go live your life and let me handle it. Some people, some clients and investors want collaboration. Hey, I want to be a part of this with you. I want to be able to have some input into this,
Mm-hmm.
and I think having those type of questions of, hey, what's your investment philosophies? Some advisors have kept it really simple, very, very simple. Hey, I'm going to do, mutual funds, and that's great. That's it. Some people say, no,
Make
I'm a
sure you're
stock
invested.
picker. Yeah,
Yeah.
exactly. Some people are more, involved in the investment process. Hey, we've got a good process. This is our joy. This is what we like, is really diving in and digging into our maybe proprietary process. So I think the more questions you can ask, the better for a potential client or investor to say, hey, is this the relationship I'm looking for?
I was just going to say this. Is this a good fit?
Mm-hmm.
Because you may match up and pair. Yeah, it's like a pairing. It's a match.
It is.
You're matchmaking.
Yeah.
Um, because you want somebody that you not only is good at their job, but even if they're good, sometimes people come off abrasive or what have you. And if the conversation's never going to be productive, it's probably not a good match.
Yeah.
You want somebody you can have a conversation with, somebody you can trust, and
Yeah. I mean, I just spoke to
that's what it's all
another
built on.
advisor, and he's from the Northeast, and he works well with type A corporate executives.
Hmm.
He's straight, he's direct, he's to the point. And, this advisor said, Tommy, if I lived down, in the Southeast where you were, I wouldn't make it, because it would come across as abrasive.
Yeah,
And so I think, part of this is personality as well, because you want that
totally.
relationship. You kind of have to have an idea of what kind of personality you're looking for. Um,
Hmm.
and as I was talking about this, one thing is important is you kind of have to know this before going into an interview with an advisor. You kind of have to know and spend some time of, hey, what do I want? Do I want to be a part of this? Do I want to do my um do I want to be a part of the research? Do I want to be collaborative? Um,
What are my own
what
expectations?
yeah, what are your own expectations? And I think that'll help you um decide, the type of relationship, or else, because if you don't do this, then you're going to fall for anything. You're going to fall for the smooth talker who's telling you everything you want to hear, but is it really what you wanted though?
Yeah, or is yeah good for you? Yeah.
Yeah. Um, and I think some things to look out for, some red flags are lack of transparency.
Hmm.
Um, you know, just be careful of anything in the investment world that's guaranteed. Not to say that the word guaranteed is bad, and it's not. But just know that advisors live in the world of the uncertain, and investments are in
Mhm.
the world of the uncertain. Um,
Read more
and,
into Guaranteed.
mhm. And the other thing is, for us at Lighthouse Wealth Group, our first meeting is to get to know one another. That's all it is, you know?
Mhm.
And it's helpful for us to know your financial situation prior to meeting, just so we can get an idea where you're coming from and what the hard numbers say. But, for us, Sam, you and I have always been in meetings where we're just asking questions. We're just getting to know you. What are your hopes and dreams? What are your biggest fears? If you had 10 times the amount of money that we see you have, what would life look like? It's up to us to ask those questions.
Mhm.
And, and at the same time, we explain our fees. I think you ought to ask any advisor in that first meeting, how are you compensated? What are the different
Yep.
ways an advisor gets compensated? Make sure you're upfront. And I would ask them, him or her, things like, what does your service model look like? How often are you reaching out to us? What does that look like? And so I think having that conversation, because if someone goes into a first meeting and all of a sudden they're just like, you need this product, you need this product, you need this product, to me, do they really know enough to be able to give those solutions right away?
Mhm.
And obviously the simpler situation you have, yeah, sure, maybe it is. Maybe someone's saying, hey man, I just need to roll over my old 401k to an IRA. Can you help me? Yes, we can help you with that. We don't have to go into these super deep questions to be able to help you with that. But if you're looking for a comprehensive, holistic financial planner, it does require a little bit of back and forth, getting to know each other, because the relationship
Yeah,
only works if it's fruitful on both sides.
that's right.
And so, I think just be aware for any of our listeners of, hey, if you're getting the immediate answer as far as the solution goes right away, before you've had time, for either party to kind of digest what you're looking for, just be aware. You don't want to come to things too quickly, I guess is what I'm saying.
Yes.
You know, I know for me, I always like to feel heard. I want to be heard. I want you to know where I'm coming from. If I'm interviewing somebody, I like to tell them, hey, here's where I'm coming from. Here's what let me give you context. If somebody starts firing at me solutions right away, I'm thinking, but you don't know me that well yet. You don't know. There's not enough information that you've gathered from
Yeah.
me to really come to that conclusion. And maybe at the end of this, you'll still come to that same conclusion, maybe not, but you have to get to know me prior to having the right to give me that solution.
You got to get the full picture. And
Exactly.
that's why that interviewing process is so key. Just asking
Mm-hmm.
questions and letting the client or prospect just go away.
Yeah, exactly. So, any other thoughts you have?
Um, I guess just harping on this too, you mentioned this, just what, if somebody doesn't explain what their service model is and how they address clients and, what their schedule is and how they service clients, if they don't have a set process for that, I think that would be an initial red flag too. If they're just going to live life off the cuff, you know, then
Yeah,
what expectation do you have as a client?
yeah,
But having something set, whether it's a certain amount of review meetings per year or, we're going to have yearly sit downs and we can have a couple check-ins in between. And these are the things that we're going to cover in each of these meetings, not going over that and, or shielding kind of what that process looks like. If they
mm-hmm.
don't have one, would be another red flag.
Yeah, absolutely, absolutely. Yeah. Well, I think I know we're out of time here, so as we wrap up, hopefully this gives our listeners here just a better idea, um, when to choose an advisor and some things to be thinking about on how best to choose an advisor. So,
Mm-hmm.
With Lighthouse Wealth Group, we'd be glad to sit down with anybody. A big part of what we do is just listen. Our goal is just to listen, learn as much as we can about you, give you that opportunity to learn about us and who we are, because choosing an advisor isn't just about making a financial decision. It's about choosing the right relationship.
That's right.
So, trust your gut at the end of the day. And if you do your due diligence, then you can feel good about knowing you're in the right relationship. And keep in mind, things change. If the relationship isn't what you're looking for, you can always change that as well. So
That's right.
But if you're unsure where to start, or if you have any other questions, feel free to book an appointment with us. We always offer free 30-minute consultations, just a chance to say, hey, what are you looking for? How can we help? Does it make sense to get together for a first initial meeting? Or maybe you just needed some guidance and that's all you needed. So we're here to help in any way. But again, please like, subscribe our podcast. And if there's anything we can help with, certainly let us know. You can reach us at 629-654-7190. Again, 629-654-7190. Tommy Derfler, Sam Rice signing off on the Spotlight podcast. Thanks so much.
We'll see you in the next one.